So my dear friends, after having a standard discussion on provisions and its related aspect, let us have quick review on some question and answer session on equalization levy. First two questions are general question. It is not provision based question, it is just out of general question. It may come for 2 marks if it comes in exam. Explain the core reason for a difference between e-commerce transaction and traditional business. See, traditional business used to have boundaries, used to have physical location. Now e-commerce transaction does not have any boundaries and it does not have any physical establishment. So look at this, causing the difficulty to tax the income of the e-commerce transaction. Look at the general answer. The core reason for a difference between e-commerce transaction and traditional business transaction causing the difficulty to tax the income from e-commerce transaction under the Income Tax Act 1961 are absence of national boundaries. We exactly don't know from where the services are being provided. No requirement of physical presence of the goods or no requirement of physical delivery in certain cases. Everything is happening online. Since e-commerce transactions are completed in a cyberspace, it is initiated in cyberspace, payment is also received in cyberspace, goods or services are also delivered in cyberspace. It is often not clear as to place where the transaction is affected, thereby causing difficulty in implementing the source rule of taxation. So the original rule or the main rule of taxation is a source rule. We don't know because service provider is located in USA, server is located in Netherlands, the service provider is located in India, users are located in India. So we exactly don't know how to determine the the source rule or where exactly source is located and which country is having right to tax the transaction. E-commerce transaction have replaced the concept generally associated with international transaction traditionally. Discuss briefly the issues involving in such transaction. So generally we are going to discuss here issues which are in connection with e-commerce transaction. Again general question, it may come for 2 marks type. The typical taxation issue relating to e-commerce transactions are the difficulty in characterizing the nature of payment and establishing the nexus or link between taxable transaction activity and taxing jurisdiction. 3 items. Nexus between or link between taxable transaction, what is taxable transaction, what is not taxable transaction, what are the activities that are permissible, impermissible, and the taxing jurisdiction, which country should take the tax. The difficulty of locating the transaction, even if you bring some tax legislation, how will you determine whether services were provided, because many services, many activities are done on cyberspace. So how income tax is going to control or monitor the transaction? Activity and identifying the taxpayer for the income tax purpose. Again, if you know the concept of dark web or service providers which are unidentifiable, there are many countries which are not sharing the cyber data with us. So obviously there are so many challenges in international taxation so far as the e-commerce activities, but India is looking forward to tackle them one by one. Next one, computational question, mark it important. PQR Limited, an Indian company, is carrying on a business of a manufacture and sale of computers as a computer under the brand name Inspire. In order to expand its overseas sales and export, it launched a massive advertisement campaign. The moment advertisement campaign is seen, you should understand this is 6% equalization levy under section 165 of Finance Act 2016. For the purpose of online advertisement, it utilized the services of Global Inc., a London-based company. During the previous year, PQR Limited paid 2.5 lakh to Global Inc. for such services. Very important, it is more than, please understand, it is more than, exactly, it is more than 1 lakh. Yeah. Next, discuss the tax implication or a TDS implication. Tax implication means equalization levy, TDS implication means 195 of such payment and receipt in the hands of PQR Limited and Global Inc. respectively if, now they are creating two situations. Global Inc. has no permanent establishment in India, then obviously equalization levy will be applicable. Global Inc. has a permanent establishment in India and the services is effectively connected to permanent establishment in India, then section 195 will apply, TDS will apply. Okay, let's look at the whole taxation. Chapter 8 of the Finance Act 2016, Equalization Levy, provides for equalization levy of 6% on the amount of a consideration for specified services received or receivable by a NR not having permanent establishment in India from the resident in India who carries out business or profession, or from non-resident having a permanent establishment in India. This is the original provision that they have written. So what do you mean by specified service? Online advertisement, any provision for a digital advertisement space, or any other facility or services for the purpose of online advertisement, and any other services as may be notified by central government. However, equalization levy shall not be levied when, sir, where such non-resident is providing specified services has a permanent establishment in India. Secondly, and obviously that business was transacted through permanent establishment. The second one is more important. The amount of consideration does not exceed 1 lakh rupees. If it exceeds 1 lakh, then equalization levy is applicable. And where the payment for specified services not for the purpose of carrying out any business or profession. Obviously, it is for business and profession, then only equalization levy apply. If it is for general purpose, personal purpose, then equalization levy will not be applicable. Now, point number 1, where global INC has no permanent establishment, in the present case, equalization levy at the rate of 6% is chargeable on the amount of 2,50,000. So 2,50,000 into 6% received by global INC, a non-resident not having PE in India. Accordingly, PQR Limited is required to deduct equalization levy of 15,000 at the rate of 6%, being amount paid toward the online advertisement services provided by global INC, a non-resident having no PE in India. And sir, if they fail to deduct this equalization levy, then there will be disallowances under section 40A clause 1B, 100% of amount paid while computing the business income. That's the consequences in the hands of the payer. Since equalization levy is attracted on the amount of 2.5 lakh, the said amount is exempted from income by virtue of section 1050. So in the hand of recipient global INC, it is not taxable income, it is exempted income. Next one, second point, where global INC has a permanent establishment in India and the services is effectively connected with the permanent establishment, then equalization levy will not be attracted, because then it will become normal taxable transaction and basic income tax will apply to the permanent establishment. Has permanent establishment in India and the service is effectively connected to the permanent establishment. Therefore, PQR Limited is not required to deduct equalization levy of 2.5 lakh, being the amount paid towards online advertisement services to global INC in this case. Since equalization levy is not attracted in this case, the exemption of 50 would not be available, and then this particular income will be taxable in the hands of, and there will be TDS deducted by PQR. Tax has to be deducted by PQR. So the tax will be deducted by PQR under section 195 because the amount is taxable in the hands of global INC, that is NR. So if they don't deduct the payment, then because it is advertisement services which is covered by section 40A1, the 100% disallowance will be attracted. It is payment made to non-resident without TDS. Next question. MNO and company, a non-resident entity is based in London, owns and operates an electronic facility through which it effects online sale of goods manufactured by it. So they are the manufacturer and they are only selling it in India. It's like a Lenovo product, okay, or any Samsung or Apple. So they are having a website access. They have given website access to the people in India, and anybody can go to their website and they can purchase the goods. They are foreign entity, but we can buy the goods from their portal in India. So they are e-commerce operator, and whenever we talk about e-commerce operator, you know one thing, sir, the equalization levy will be deducted at the rate of 2% only when they are making turnover in India exceeding 2 crore rupees. So that limit you have to remember, 2% 2 crore, 6% 1 lakh. Okay, receipt from sale of goods to person resident in India, 145 lakh they have earned. A receipt from sale of goods to person not resident in India but resides in any other parts of the Southeast Asia. So total sale is 99 lakh, that should not be covered actually, but out of said sale, 60 lakh relate to receipts from a person using internet protocol address located in India. So person is located in Bhutan or Sri Lanka or China or any other Asian country, but please understand they are using Indian IP address. If somebody is using Indian IP address, then that much income will be considered or will be liable for equalization levy of 2%. Okay. Discuss the equalization levy implication on such receipt in the hands of MNO, if, that is e-commerce operator, if MNO has permanent establishment in India, if it is having no permanent establishment in India, then obviously 2% equalization levy will be applicable. And if MNO has permanent establishment in India and the sale was affected through that permanent establishment, then normal PGBP will be computed the way we compute for any other business operation in India. Would your answer change if out of the receipt be above, only 45 lakh relate to receipt from the person using Indian protocol? Obviously, see here 145 plus 60, it becomes 205. Therefore, it exceeds 2 crore, so it is applicable. If this becomes 45, so this 145, this 1 and 45 becomes 190. If it becomes 190, then it falls below the threshold limit, then equalization levy will not be applicable. Look at the answer. The Finance Act 2020 has inserted new section 165A in the Finance Act 2016, providing the equalization levy of 2% on amount of consideration received or receivable by a e-commerce operator from e-commerce supply or services made or provided or facilitated by it inter alia to a person resident in India or a person who buys such goods or services or both using internet protocol located in India, IP address located in India. MNO company is an e-commerce operator since it is a non-resident owning and operating an electronic facility for online sale of goods and services. What if MNO does not have permanent establishment in India? In this case, a gross receipt of e-commerce operator from the e-commerce supply and services facilitated is 2.05, that is 205 lakhs, 2.05 crore. 145 plus 60, not total. Okay, only 60 we will consider. So total is 205. Since the total receipt which are chargeable to equalization levy exceeds 2 crore, equalization levy at the rate of 2% is attracted on the above sum, and that is 205 into 2%, that will be 4.1 lakhs. That has to be paid quarterly. Obviously, it has to be paid quarterly. Note, if the above were only 45 lakh, then the equalization levy would not be attracted since the gross receipt would only be 190 lakh, which is below 2 crore rupees. So what if they are having permanent establishment in India? Equalization levy would not be attracted. That is very much clear. Where non-resident e-commerce operator has a permanent establishment in India and the sale of goods is effectively connected to the permanent establishment in India. This is irrespective of the quantum of the service, that is be above, whether 60 lakh rupees or 45 lakh rupees. So that is not having any limitation. It is just the PGBP computation that you have to do. Equalization levy will not be applicable even if it is 200 crore or 2000 crore if you are having PE in India. Thank you.